Well, it's so nice to have Eddie Krief with us here today. Eddie, uh, thank you very much for joining us here on the pre-awards show. Tell us a little bit about yourself. Who's Eddie?
Good afternoon, Zach. Thank you very much for having a chat with me. Yes, who's Eddie? Eddie is currently the Chief Sales Officer of DCCP. I've been in this industry, in the insurance industry, for 24 years, in multiple areas: short-term insurance, life insurance. Dabbled a bit in the medical insurance space as well, and currently find myself in the credit life insurance industry. Yep, I play golf, I scuba, I do a bit of hunting. Yep, that's a bit of my hobbies. Yep, and I've been with the company for almost the last 4 or 5 years now.
All right. Now, the company you're mentioning there is DC Credit Protect, also known to most of us as DCCP. Tell us a little bit about DCCP.
Zach, yes, so DCCP started in 2019, specifically looking at breaking into the debt review industry. We specifically chose the debt review industry due to the NCR regulations that changed in 2017 that gave us specific guidelines. One of those being that we are not allowed to charge more than $450 per thousand. And unfortunately, in the past, the credit life wasn't regulated, and you could charge anything really. And we've picked up credit providers that were charging up to 30 Rand per thousand. So really, we wanted to come into the market, help the consumer, save them money for a client who is already in financial turmoil, and also assist the debt counselors, to generate an additional income. We at DCCP understand how much work the debt counselors put in to get the clients through the door, and then onboarding for us makes it so much easier because they're doing the hard work, and we also look after our DCs and remunerate them properly. So saying that, we started in the credit life industry, but we've got various other products that we offer to the market now. There's a bit of a funeral product, there's an income protector, there's a life conversion product, and we're also busy now starting with our short-term insurance department, so that we can start looking at people's cars and household, etc. We're based in Pretoria, and we have a staff complement of about 30 people at the moment, handling from sales to admin to claims. So that's in short what DCCP does.
Yeah, and it's nice to see that you're expanding. But now tell us a little bit, Eddie. People, when they, for instance, buy a car, they need insurance. Kind of, we know these things. Or maybe we know, hey, I should get insurance. What about people who have insurance? How does one's insurance needs change over time? I mean, what kind of situations would make you look at your insurance?
Well, Zach, yeah, as life goes on and your life changes, there's various things that can happen. And let's look at debt review clients, for instance. Their financial situation is changing. For whatever reason, it could be something like a COVID where income reduced, and now all of a sudden you're sitting in a situation where you may not be able to afford all of that insurance. So that will bring in a change. So a lot of people will then start looking at the life portion of the insurance and say, well, do I need this right now? And they might opt to cancel it. Looking at short-term insurance, what can I do? Can I take lesser insurance? So from a comprehensive to maybe third-party fire and theft on your vehicle, should that vehicle be paid off? That is possible. If that vehicle is still under finance, you are obliged, and by law, by your agreement, that you must have comprehensive insurance. But then it's very important to go and have a look to see, is my vehicle insured for the correct amount? Am I not over-insured? When last did you update your vehicle? Because every year, your value of your vehicle depreciates. So it's very important, from my point of view, every 6 months, every year, have a look at that type of insurance to see if you cannot save some money. That's very much looking at debt review. To the general public, you're buying a new phone. That phone needs to be insured. The phone that you insured 2 years ago was 15,000 Rand. It's now going to cost you 20,000 Rand. Vehicles prices are going up. The value of your contents of your house, for instance. You bought a TV 5 years ago and it was a 10,000 Rand TV. To replace that TV today is going to be 15,000 Rand. So you continuously have to look at the values of your insurance, whether that be life insurance, credit life insurance, short-term insurance. So it's an ever-changing thing, and you need to review your policies regularly to make sure that you keep up with the markets, and to avoid underinsurance. And as I mentioned now, if you're not going to increase your content for that 15,000 Rand TV, and it's still insured for 10,000, you're now underinsured and will get paid out less on that TV. So it's ever changing, and you have to stay up to date with it.
Tell us a little bit about this catchword, credit life or credit life insurance. What is credit life? Maybe just break it down for us a little bit. Tell us, because we do hear a lot about it in the industry, and maybe if a consumer is talking to a debt counselor, those words will come up. What does it mean?
So let's start with the definition of credit life insurance, and that explains it the best. So credit life insurance is insurance that a consumer takes out in the event of death, permanent disability, temporary disability, inability to earn an income, or otherwise called retrenchment, and dread diseases. Now, this insurance is purchased by the consumer to protect the credit provider. Okay, so the credit provider has given you a loan, and that money needs to be protected. So in a situation where you talk about death or permanent disability, this policy, for instance, would settle the outstanding balance should there be a death or a disability. And the banks are happy and they've got their money, and the client's family is looked after. They don't owe any money. So that's from a once-off payment point of view. From a monthly point of view, you're looking at retrenchment, temporary disability, and dread diseases. That pays a monthly fee to the credit providers to make sure that your installment is covered. Right. So in short, it covers the finance agreement that the consumer took out with the credit providers.
Yeah, so it gives the credit providers a lot of peace of mind, and also takes away any obligation in case of those things for the consumer. Eddie, typically, like those month-to-month things, how long do those kind of benefits normally last?
Well, Zach, it depends from provider to provider. So, the NCR has a set of regulations, which is the minimum regulations, but then insurance companies or service providers can also decide to give additional benefits. NCR regulations specifically, retrenchment must be 12 months or until the consumer has found employment again. Temporary disability, again, 12 months, or until the consumer is in a position again to work. So say, for instance, I normally use the example of a doctor. Say, for instance, that doctor was in an accident and injured his hands. He can't operate. He now goes for operations and rehab on his hands. 8 months down the line, he can start operating again. So that policy will then only pay for 8 months. Right. Dread diseases is not an NCR regulation, but it is one of the products that is in our policy and most of the policies in South Africa. And that product pays for 3 months. Okay. So dread diseases, if we look at cancer, we start on the 3 months and then we assess the situation. Is the client, is it operable and can be removed and the client can continue after 3 months? Or is it more aggressive and the client needs to go for chemo, and then it might turn into a temporary disability claim, or worst case scenario, also death. So that's why it's only 3 months. So it's assessed on that basis.
Right. So what I'm hearing is that not all products are exactly the same. They're similar, but there are obviously advantages to some over the other. Many consumers, they don't even know that they have this product. They kind of signed a few forms and there was a lot of talking. Do you find that common when you talk to people about the subject?
Yes, yes, very much so. Yes, very much so. And it's a very much still a process for us as financial services provider in the credit life industry is education. Um, we I think there's a lady called Maya Money that did us a huge favor because she went viral during COVID and explained to a lot of people what it is about. But there is still a huge gap in the market where people actually don't know that they've got it, and they don't know what it's for. Which hopefully after the 2017 regulations, the consumers out there are being more educated and understand what it's about, so that when you get retrenched, there is you can claim. If you pass away, there is a claim. And a lot of people don't. A lot of people don't know that, but that's our jobs as financial services provider in the credit life industry, is to educate the clients and the consumers.
And one thing we'd just like to mention to our viewers is that you have the option of supplying your own service provider when it comes to putting this type of insurance together with your credit. Is that correct, Eddie?
100%, 100%, Zach. And the Financial Sector Conduct Authority's laws are very clear that any consumer has the choice of where he wants to insure himself. So talk about cars. You can be with Outsurance today and you can be with Santam tomorrow. You have that choice. And the same with credit life. So there are the credit providers have got their financial services providers within their entities where you can have insurance. But there's also companies like ourselves, which are outside of that. And also, you could also have a normal life policy with the likes of a Santam or a Sanlam or a Discovery or Old Mutual. If your policy has got the minimum requirements, so death, disability, and retrenchment, you could actually cede that policy to the bank as well. So yes, you have that choice, and you don't have to go for credit life. As I said, a normal life, disability, retrenchment policy with a Sanlam or an Old Mutual can also be ceded.
But we are talking a little bit about debt reviews. So perhaps when people come into the debt review space and the debt counselor sees that there are these needs, or maybe the needs are already met, there's also the option to make a change. So even if you have a policy, as you mentioned, you could now change it. So why do people sometimes do that with credit life insurance in the debt review process? Why has that become quite popular in the industry?
Yes, like I think the NCR regulations, and I keep on referring to them, of 2017 really opened up the door. And that R4.50 maximum that you're now allowed to charge is sort of where the credit providers' threshold is. They're sitting at R4.50. We have picked up that some of the banks have reduced their rates, but coming from an insurance background, it is possible for us to lower the rates. Now, your credit life insurance rate is calculated at R1 per 1,000. Now, maximum you're allowed to charge is R4.50. We can bring that rate down considerably, and in many cases save these clients thousands and thousands of rands. We did a bit of an exercise recently where we said, okay, let's have a look at somebody that we're saving R100 a month, all right? And let's take the average of 5 years for debt review. Yep. That's a 60-month period that you're under debt review and you're saving R100 every month. In our calculations that we did, is we saw that we could possibly shorten the debt review period with 2 months on R100 savings. Now, I'm not giving any information away or saying ID numbers or anything, but I can tell you that we have seen clients where we save them in excess of 1,500 Rand a month, which is huge. And the unfortunate thing that has happened here is that the 2017 regulations addressed future finance agreements, but didn't address them retroactively. So we are still picking up clients that are paying 15 or 20 Rand per thousand. And that's why it's important for the debt counselors to take the credit life as part of the debt review process and save that client money. We can definitely make a huge change in that consumer's life, and just loosen up a little bit of money to pay into debt and get that client debt free a little bit quicker, and you can get back into the economy and make a change.
Yeah. Eddie, is it a complicated claims process? Let's say something happens to me and I do become unemployed or temporarily experience some sort of disability that's keeping me from earning. Is it difficult to claim?
Zach, yes and no. So depends on where you sit. So let's look at claiming from a credit provider. All right. So client A has got a FNB account, a Standard Bank account, an ABSA account, a net bank account. Right. So that client now needs to go and claim from each of those credit providers' insurance. Okay. ABSA asks for a set of documents with their claim process. FNB would have a different process. Standard Bank would have a different process. So each of the credit providers, insurers behind them, different rules, different processes. So yes, that can be arduous. That can be difficult for a consumer, especially if they don't know the claims process. And they now have to go and do it with all the various credit providers. From our point of view, when we consolidate and we take over the credit life insurance, we will substitute all of the bank's policies and issue you one policy, right? With one claims process, one single set of documents to complete, and one contact point. And I think that makes it a little bit more easier to claim from somebody like DC Credit Protect versus having to claim from all the different credit providers.
Yeah, because normally you're a bit stressed at that particular time too, and you've got time constraints and energy constraints and all sorts of things going on. So I can see the advantages there. Right, but not everybody can just tell you what insurance you should have. There's a thing called FAIS. Tell us a little bit about that. What is that? Can I just walk down the street telling people, you must get this policy, you must get that policy? Or how does that work?
No, Zach. So no, not everybody can do it. You must be qualified and regulated and registered with the FSCA, the Financial Sector Conduct Authority. And FAIS falls within their regulatory framework. So FAIS is the Financial Advisory and Intermediary Services Act. So that basically governs financial advice. So from a sales point of view, if you want to sell insurance, you need to go through a process. You need to get qualifications. You need to go and write the extremely horrible regulatory exams. And then you become a qualified rep, go onto a license. Then you can give advice. In order for you to do intermediary services, and intermediary services is really when it comes to your admin. So administrative work, adding an account, deleting an account, cancelling a policy, those are classified as intermediary services. And the same set of rules apply to people that work in that in the intermediary services section, is that you also need to be qualified. There's a set of rules that the FSCA gives you to say there must be product-specific training done so that you understand the product. A class of business training is whether you're going into life insurance, short-term insurance, investments, RE exams, as a rep, RE5, if you want to become a key individual, that's your regulatory exam number one. And if you become a key individual, you are then in a position to then qualify and apply for a license to become an FSP. But yes, it's an industry that's very much regulated, and the FAIS Act is one of them. There's the Long-Term Insurance Act. There's the Short-Term Insurance Act. So yes, the insurance industry is highly regulated.
Okay,
Um,
so I won't walk down the road just telling people what to do, but I might see a need. So let's say I'm a debt counselor. I'm thinking, well, this is maybe something that I should be letting my clients know about. I should kind of encourage them to think about insurance, their situation, their credit life, whether they have the right cover to get them to speaking to the right person. Well, what advice would you give to a debt counselor?
Well, Zach, this is exactly why we positioned DCCP in this industry. Now, to be able to become a FSP is a long, arduous process, and the debt counselor needs to focus on debt review. Yep, and that's your specialized area as a debt counselor, and focus that on that. So DCCP has placed them in the market where we will do that advice on your behalf. We will contact with your client. We will give the advice, and we will make sure that all the regulatory requirements and compliance from the FSCA is met in the correct way, so that the DC can focus on their expertise. So we've really made it very easy for the debt counselors to work with us. It's sending us a referral or a lead, and we will handle the sale and the compliance and the financial advice on behalf of the debt counselor.
Okay. So that's good for me to keep in mind when I'm doing my budgets. Sure, I might be setting money aside for the insurance, but I'm not telling the person. I'm referring them to someone who knows what to do. Okay, who knows the best product for them. But now, if I'm a consumer and I'm hearing about this stuff maybe for the first time, or maybe I have heard about it a little bit, but I've been hesitant, what advice would you give them?
Well, yes. Again, consumers out there, if they are not under debt review, um, they can also contact with a DC Credit Protect. We don't just work with clients under debt review, and they can request a quotation from us. They can go to the banks, go to the credit providers, insurers, and start asking questions and say, but how much am I paying, and why am I paying so much? Can I not get a better rate? But yeah, like that's part of what DCCP is also trying to do in the market, is not just debt review. Let's look at all the other avenues, and there's loan companies out there, that gives you a loan, and there should be credit life on it. So if you're going to take out a loan, or a credit card, or whatever sort of finance agreement where there should be credit life, you can contact with us, and let's give you a quotation and say, you don't have to go with that insurer. There is alternatives, and educating the clients out there, because there was never education regarding the credit life, and that's just, it's going to take a long time, but we are seeing a change in the market, of clients understanding credit life a little bit more, and is more aware of the fact that I have got credit life.
Yeah, I also have seen an increase in claims, which is a good sign, because there were years when people never claimed anything regardless of the situation, and they had been spending a lot of money towards a product that they then never made use of. So that was quite sad. Eddie, you sound like you know what you're talking about. You sound like you've done all those regulatory exams about all those things. How do people get hold of you if they want to talk about the subject?
Yeah, thanks, Zach. Yeah, doing this for 24 years, yeah, you get to know a little bit here and there. Zach, so they can contact us telephonically. Our office hours are 8 to 5, Monday to Friday. Telephone number where you can contact us is 012-881-0296. You can also go to our website, www.dccp.co.za, or you could email me directly. Quite easy, Eddie@dccp.co.za. Yep, and You know, whether it's a debt counselor that wants to have a chat with us, whether it's a consumer directly, everybody's welcome. You know, we're not going to force you into taking a policy or getting a quotation from us. If you just want a little bit more information, we're more than happy to help you with that, educate the clients. You know, is part of what we do and what we aim for.
Eddie, thank you so much. I really appreciate it.